Welcome back to Investing Talk Podcast. Today we're looking closely at a company that's been generating some chatter, Unusual Machines. Our goal here is pretty straightforward. Take all the info we have, break it down, and pull out the really crucial insights for you. Help you get up to speed quickly. We'll be covering, their financials, their spot in the industry, what the stock's been doing, and the potential upsides and downsides. It's a fascinating mix, honestly. Rapid growth, but some big hurdles too.
It really is. And what's interesting is how the pieces don't always line up perfectly, that growth rate versus the current profit picture and the market signals. Kind of all over the place.
Definitely. So let's start with the basics. Who exactly is Unusual Machines? What's their main thing?
Okay, so they're in the commercial drone space. They provide smaller drones, but maybe more importantly, they're also making key components for drones. Think motors, that kind of thing.
Motors. Got it. And how do they sell these? Is it all direct?
No, it's a mix. They do B2B, business-to-business sales, but they also sell through e-commerce, online and through some retail channels too.
And they haven't been around forever, have they? Relatively new.
Pretty new, yeah. Founded in 2019. You might actually remember them as AeroCarve US. They changed their name to Unusual Machines back in July 2022. They're based down in Orlando, Florida.
Okay, Orlando. So, young company, hot industry. Let's talk money. What are the numbers telling us, especially on the growth front?
Well, if you look at the top line, the revenue, it's growing incredibly fast.
Fast feels like an understatement from what I'm seeing. Q1 this year, 2025, they hit $2 million in revenue.
Right, $2 million.
But it's the speed of that increase. That's up 59% from Q1 last year.
Mm-hmm.
And get this, compared to Q1 2 years ago, it's up almost 230%.
That's, 229.98% to be precise over 2 years. That kind of acceleration is pretty remarkable.
Seriously, just a few years in.
It shows they're either grabbing market share really quickly or demand is just, exploding.
Yeah.
And if you look at the trailing 12 months, TTM, revenue is sitting around $6.99 million.
Okay, almost $7 million TTM. That revenue growth is exciting, no doubt. It's just they're doing something right, getting those sales. But as we often see, rapid growth can mask other issues. What about profitability? Are they making money?
Well, that's the other side of the story, and it's quite different. Revenue's climbing, yes, but they aren't profitable yet.
So negative earnings per share then.
Exactly. For Q1 2025, their EPS was minus $0.21, which is actually down from 0 cents a year ago.
Down from zero. Okay.
But the figure that really jumps out is the trailing 12 months net loss. It's a substantial $34.14 million.
Wow. Hold on. $34 million loss on roughly $7 million in TTM revenue.
That's correct, which translates to a TTM EPS of negative $3.17.
That loss seems huge compared to their revenue. Why so high? Is that typical?
It's certainly notable. I mean, young tech companies often run losses as they invest heavily, sure, but a loss that's, nearly 5 times your annual revenue? That suggests very significant spending. It could be heavy R&D investment, could be costs for scaling up manufacturing, maybe aggressive marketing spend to fuel that revenue growth we saw, or costs tied to big projects like this new facility they're planning. It's a major cash burn, definitely a red flag for anyone focused on the bottom line right now.
Okay, so the growth is expensive.
Yeah.
Very expensive. How are they managing that? Do they have cash? What's the balance sheet look like?
Well, on the plus side, the information shows they do have more cash than debt currently. That gives them some breathing room, some flexibility.
That's good.
And interestingly, despite that big annual loss, they actually reported a positive net cash flow in Q1 2025, about $1 million.
Positive cash flow in the quarter, even with a net loss. How does that work?
It can happen. Sometimes it's about the timing of payments, or maybe collecting receivables faster than paying bills in that specific period, or perhaps a one-off event. It's a small positive sign, maybe, but the overall profitability challenge is still the main story. And because of the negative EPS, their return on equity is also negative. Which makes sense. You can't have a positive ROE without profits.
Right. So summing up financials, incredible revenue growth, but really deep losses. Still, they've got more cash than debt and had that one recent positive cash flow quarter. Quite the contrast.
It really is. That tension is central here.
So what's the plan then? What's their strategy to keep growing, maybe turn things around? Where do they see themselves fitting in this whole drone market?
Their focus seems pretty clear right now. 2 main things, really scaling up that motor production we talked about and developing drone kits that meet government compliance standards.
Government compliant. That could be a key market.
Potentially, yes. It positions them strategically in both the commercial and maybe government-related parts of the drone market.
And that market itself is still growing like crazy, isn't it?
Absolutely. You've got technology moving fast, regulations changing. It creates a lot of opportunity, but also complexity. It's a very dynamic field.
And who are they up against? Who's the competition?
Well, there are established players, bigger names like Teledyne and other focused companies like Parazero, SafePro Group. Unusual Machines looks like they're trying to carve out a niche, maybe be a bit of a disruptor, a challenger brand.
You mentioned motor production as a key focus. Is there something specific happening there soon?
Yes, this is a big one for them. They're planning to open a brand new motor production facility right there in Orlando. It's scheduled to start operations in September 2025.
Okay, a dedicated motor facility. Why is that so important for their strategy?
It's pretty significant. It means potentially bringing more manufacturing in-house, or at least seriously boosting their capacity for a core component. That could give them better control over their supply chain, maybe lower costs eventually, improve quality control. And they've explicitly said it's part of their plan to work towards financial stability. It's a real investment in their future capabilities.
Makes sense. But building a new facility, that takes serious money, which probably connects to some recent news about funding.
It definitely does. They recently announced a pretty large public stock offering aiming to raise $40 million.
$40 million. That's a big number, especially next to that $7 million TTM revenue. What's the plan for all that cash?
Well, it's tied directly to those expansion plans like the Orlando facility. That's a major use case, but also just general working capital to keep the lights on and fund operations while they're growing so fast and, well, losing money. Raising that much definitely signals very ambitious growth plans. It also signals they need quite a bit of outside investment to make it happen.
Big ambitions, big needs. Okay, so how has the stock reacted to all this? The growth, the losses, the new facility plans at this big offering?
Well, in a word, volatile. The stock has seen some really big swings, which isn't uncommon for companies like this, in fast-moving sectors, still finding their footing.
How big are we talking?
Just look at the 52-week range. The low point was $1.13, and the high was $23.62.
Wow, $1 to over $23. That's a massive range. Shows a lot of changing opinions among investors over the past year.
Definitely. Big swings in perception and price.
And more recently. Any notable moves?
Yeah, there was a pretty decent jump just the other day, June 2nd. The price went up over 12% that day. It opened around $5.49 and hit highs near $5.96.
Okay, a good single day.
And trading volume has been up too. End of May 30th, saw over 634,000 shares traded.
That kind of volume, that kind of jump usually means something caught the market's eye, right?
Often, yes. Maybe news about the expansion, or perhaps they presented at a conference, generated some positive buzz, things like that. Can definitely move the needle, at least short term.
So what are the professional analysts saying? The people who cover this stock for a living?
The analyst sentiment we're seeing is actually quite positive, surprisingly positive maybe, given the losses. For example, Litchfield Hills Research just started covering them with a buy rating and a $20 price target.
$20. When the stock's been trading closer to $5 or $6, that's optimistic.
Very optimistic. And the overall consensus view from analysts is apparently a strong buy. The average 12-month price target is $14. That implies, what, over 112% potential upside from where it's been recently?
Wow, okay, so analysts are seeing huge potential here.
Right.
But that really contrasts sharply with that $34 million net loss we talked about. How do those two things square up?
That's the core tension, isn't it? Analysts are often looking further out. They're pricing in the potential success of the growth strategy, the Orlando facility coming online, maybe capturing a bigger piece of that expanding drone market. They're betting on the future story, not just the current P&L.
A bet on the future. But it sounds like not everyone is buying into that future story just yet.
That's fair to say. We see the skepticism pretty clearly when we look at the short interest.
Ah, the short sellers. What's happening there?
In May, the number of shares being shorted, essentially bets that the price will go down, jumped significantly. It rose by almost 48%, up to 2.2 million shares.
Nearly 50% increase in short interest in 1 month. So a lot more people are actively betting against the stock now. Why would they be doing that?
Well, their thinking could be driven by those heavy losses we discussed, maybe doubts about whether the company can really pull off the expansion smoothly, hit their targets, or maybe broader worries about the drone market or regulatory hurdles. They see more risk than reward in the near term.
But high short interest can sometimes backfire on the shorts, can it, if the stock starts moving up?
Absolutely. That's the potential for a short squeeze. If good news hits, or the stock gains momentum for whatever reason, those short sellers might panic and rush to buy shares to close out their positions and cut their losses.
Yeah.
That sudden buying pressure can send the stock price shooting up very quickly.
Interesting dynamic. So you've got analysts shouting strong buy with high targets and a growing number of traders betting heavily on a price drop. How does this specific company drama fit into the wider market mood right now?
Well, the general market sentiment, if you look at indicators like the Fear and Greed Index, is leaning towards fear lately. Investors seem pretty cautious overall.
So caution in the air generally.
Right, so you have the specific analyst optimism for unusual machines happening against a backdrop of broader market hesitation, another layer of contrast.
It really is a complex mix. Exciting growth, scary losses, professional optimism, investor skepticism, a nervous market. Okay, let's try and pull this all together. What are the biggest risks investors need to keep an eye on here?
Okay, key risks based on what we've seen. Regulatory risk is definitely a big one. The rules for drones are still being written in many ways. Changes there could really impact their business, their market, their profitability.
Like new restrictions on where drones can fly or who can operate them?
Exactly. Then there are supply chain issues. We saw mentions of tariff charges hitting their gross margins already. That kind of thing directly squeezes profits.
Okay, regulatory, supply chain, and the elephant in the room.
Yeah, the fundamental challenge is just getting to profitability. They have to find a way to stop losing so much money, get that ETS into positive territory. That's critical for long-term survival and success, no matter how fast revenue grows. So yeah, even with the growth, these risks, regulatory, supply chain, and especially profitability, are pretty substantial. They need careful watching.
So if you put it all together, the risks, the growth, the plans, what's the overall picture, the outlook for unusual machines?
Well, it's clear they face major financial hurdles, mainly that lack of profit. But on the other hand, they do have strategic strengths. They have these ambitious expansion plans like the Orlando facility. They have a clear focus on key components like motors, and they have those positive analyst ratings pointing to significant potential upside.
It's definitely a story with two very different sides. Bright spots and some deep shadows.
For sure. And based on that mix, the analysis suggests a certain kind of approach for potential investors.
Oh, to what?
The takeaway seems to be that this could be considered a speculative buy, but that comes with a big asterisk. It's really only suitable for investors who are comfortable with quite a bit of risk.
Speculative buy. Can you unpack that a bit? What does that really mean in this context?
It means, look, there's acknowledged potential here for a big payoff. You see the growth, the market opportunity, the strategic moves there could be significant upside. But it's speculative, precisely because those risks we just talked about, the massive losses, the regulatory unknowns, the challenge of actually executing these big plans are very real and very large. So it's absolutely not a stock for someone looking for safety or steady income right now. If you're considering it, your focus has to be entirely on that long-term growth potential and your belief that management can navigate these major obstacles. You're betting on the turnaround story, not the current reality.
Sounds like a high-stakes gamble on their future execution then.
That sums it up pretty well, acknowledging the potential but being very aware of the significant risks involved.
Okay, so that wraps up our look at unusual machines. A company with, as we said, that explosive growth and big plans in a hot sector, but also grappling with serious losses and navigating some choppy waters in terms of market risk and regulation.
Definitely a lot of powerful and sometimes opposing forces pulling on this one company.
Which leads us to a final thought for you, our listeners, to chew on. We've seen the stock's wild ride, the huge gap between analyst optimism and rising short interest, and this major new facility about to come online. How do you think these conflicting pressures might shape unusual machines over the next year or so? What specific news, what data points would you be watching most closely to figure out where this company is really headed? Let us know your thoughts. And if you found this breakdown helpful, please do subscribe, like, and maybe leave a comment. It really helps us out. We'll catch you on the next Investing Talk podcast.